Hello everyone and welcome to this week's Forex analysis. On Friday, the US Federal Reserve led by Mr. Jerome Powell has finally announced the long-awaited interest rate cut. It is a significant development and it is sure to impact the global Forex market. The rate cut is set to be formally announced in the next Fed's policy decision on September 18th, and now the million-dollar question on every month's mind is, will the Fed cut rates by 25 basis points or they will go with aggressive rate cut of 50 basis points? This decision is going to be crucial for the future direction of US dollar as well as other major currency pairs. So I want to hear your thoughts. What do you think the Fed will do? Will they opt for 25 basis point cut or will they go with 50 basis points? Let me know your views in the comments below. I'm really interested to hear your perspective on this. I'll be diving into all the details and analyzing the potential market impacts in just a moment. So make sure you stick around until the end. So let's begin the chart analysis, and the first instrument for the week is dollar index. I'm going to start from weekly time frame, and I need to clear my screen here, clear my chart, and moving to step line chart. Now on the basis of step line chart, I'm going to apply Fib extension starting from the highest point, connecting to the first low created and then the next lower high created. It is going to project in the downward direction the upcoming level. So let's do the extension here. So going on Fib extension starting from the highest, connecting to the lowest and the lower high formed. Now 98 is the level shown, the first extension level. And current price of dollar index is, the current level of dollar index is 100.59. Now we are very close to the previous support here. So I'm going to add a horizontal line here. And we have just cleared it. So just broken it. Maybe it's a real breakout or a false breakout. We don't know yet. I need to change here. The blue line is the support I'm talking about. Now I'm going to the lower time frame, that's daily. Now here on the daily time frame basis, I can see the index is creating a sequence of lower highs, lower highs, lower highs, lower highs in conjunction with lower lows all around, and we do not have any bullish divergence here. In fact, the histogram is showing momentum in the bearish direction. So on the basis of daily frame, everything looks bearish for dollar index. I'm going to apply one more extension here starting from the previous high, connecting to the low and going back to the next lower high. I'll be using a different colored extension line now. So the next level in sight is exactly 100, the psychological mark. We are very close to that. So let dollar index reach $100 mark, 100 level mark, and I'm expecting a short-term correction from 100, short bounce, and then continuation to 98. Let's go to the next time frame now. That's 4H. Now on 4 hourly time frame, I can see that there is loss of bearish momentum here because it's creating divergence. Not yet completed because the MACD lines are still open-ended in the downward direction, so I cannot rely on this, but definitely there is a slowdown here. So be cautious on the lower time frame. Moving to 1H. On 1 hourly chart, again, it's creating a sequence of low and lower low, sequence of low and lower low on histogram, sequence of low and lower low on MACD line. So everything remains in favor of sellers here, no signs against, and I'm going to apply Fib extension on the nearest high and lower high. So I'll be connecting Fib extension in the downward direction from this high to the next lower high, which will give me the immediate target for dollar index. So connecting high, low and lower high now. Now we are very close to 300% extension, and the next level is 100.25 followed by 100.13. So definitely bearish, no signs against. Only on 4 hourly time frame, I can see that there is slowdown on the basis of histogram. Moving to 15 minutes, everything looks bearish. No bullish momentum for dollar index, although there is no divergence here. So on the basis of histogram, we got some continuing divergence, but the BOS is not yet done, so bearish. So when dollar index is bearish, so all USD led pairs are going to move downwards. USD JPY, USD CAD, USD CHF, downward direction, and all currencies against dollar are going to be bullish, and the major impact is going to be on Euro USD. So the next currency pair is Euro US dollar, starting from weekly. And again, I'm going to clean my chart. So what I've done here on the weekly time frame, first I've connected the falling trend line. So by connecting the high and the lower high, we got the falling trend line, which is resistance for the market. And now I'm going to apply fib extension in the bullish direction. So I'll start from the lowest level, I'll take it to the highest level, the first highest level, and then I'll connect with the higher low here, ABC, which will give us the extension in the bullish direction. So I'm going to plot fib extension in the upward direction as explained, and here we get the target. The first target in sight is 1.1455. So let's mark this level. Okay, and moving to daily now. Now on the daily frame, euro dollar is still making higher lows and higher highs, so the market remains bullish. The pattern is bullish, so we have low, higher low, higher low, higher low, higher low all around, and no divergence. MACD lines open-ended in the bullish direction, histogram no divergence completed, so everything remains bullish. I'm going to apply fib extension one more time on the daily frame, connecting from the low, high, and higher low. We'll just change the color here to blue now. So we it has just crossed fib extension 161, and the next level inside is fib extension 200. I need to understand the level here. So that's 1.1257. Again, a psychological mark, 1.1250. So euro dollar is going to reach 1.1250, the next destination. Let's move to 4H now. On the 4-hourly chart, again, there is a probability of bearish divergence. So euro dollar chart is exactly inverse of dollar index. So if dollar index is showing a probability of bullish divergence on the 4-hourly chart, so euro dollar is showing the probability of bearish divergence on the 4-hourly chart. And here I'll explain. So we have higher highs, and there is a probability based on histogram. The MACD line crossover in the bearish direction is not yet done, so I cannot rely on this. It's still a probability. So let's go to the next lower time frame. On the basis of price pattern, we are still getting higher lows, higher lows, higher lows, and higher highs all around on the 4-hourly time frame. Let's move to 1H. Again, on 1-hourly chart, no signs against for the buyers, and the pattern remains bullish. We get to see higher lows and higher highs, histogram creating higher high, MACD lines creating higher high, and expectation is to continue in the bullish direction. I can also mark a rising trend line here. So I'll be joining the lowest point of 1-hourly chart, and this is the rising trend line. So until price remains above this rising trend line, everything remains in the control of buyers. So no selling plan until we break below this rising trend line. Going to 15 minutes, something similar. So we have a pattern of low, sequence of higher lows, and again euro dollar is consolidating in a very tight range here, and the expectation is to continue in the bullish direction with the next level in sight as 1.1250. So currently we are at 1.1183. So there is a good probability, high probability, that it is going to rise another 70 to 75 pips from the current level, and ultimately I'm targeting 1.1455. Now the next instrument I'm going to discuss is Canadian dollar versus Swiss franc. Let's start from the weekly frame here. I'm going to clean the chart here, and on the basis of weekly time frame chart, here we do not have bullish divergence expected, anticipated once we get the bullish crossover here, but till now everything remains bearish because MACD lines, they are open-ended in the downward direction, so no bullish crossover completed, and we have a sequence of low and lower low, low and lower low, and I can also see first push down, small correction up and a major move down. So this is the strength of sellers. So everything remains bearish until on the weekly chart we get to see a break above this price point. So this is going to be around 6500 mark, 0.6500. So I'm going to apply fib retracement starting from this high to the current low. And right now CADCHF is in the retracement, bullish retracement. Moving to daily chart now. Now here we go on the daily frame. Now on daily frame, my expectation is that CADCHF will complete its A, B and C pattern, that's corrective wave, and I'm going to apply fib extension. So we will apply on A, B and C points here. So we'll get the bullish target, only short term bullish. The major trend is still bearish, so we are playing counter trend here, assuming that the current price is the C point. So I can see the zone to be targeted as the levels between 0.6450 to 0.6488. I'll also add a falling trend line here. Since it's a falling trend line resistance, I'll mark it with red. So we get the confluence here. So it is the overlap of the falling trend line and the magnet zone here. The fib extension 100% and fib retracement 80% of the previous downward trend. Moving down to 4H. On 4 hourly chart, I'm going to apply first I need to look for divergence here. So here we have spotted divergence, higher highs and lower high on the chart here, on histogram here, sorry, and the BOS is done. If I'll take the wider one, then the BOS is pending. So short term expectation is like I'll count retracement between A and B. So this is going to be our A here, the lowest point A. I'll count the highest point as B, and we are still looking for point C. So I'll use Fibonacci retracement here between A and B, which is going to define the third point. So expect bullish bounce somewhere around 61% mark. So this is your anticipated C point. And now again, fib extension in the upward direction 61.8 is around 6343, followed by 100%, which is also creating a magnet zone, and this time magnet zone is slightly lower than the falling trend line. So my expectation in the short run is that CADCHF will complete its ABC pattern and then we will switch to selling, because weekly and daily they are still bearish. Moving to 1H. On 1 hourly time frame, I can see that after creating a sequence of lower highs, lower highs, lower highs all around, and along with lower lows, the last 2 or 3 lower low points have created bullish divergence and the break of structure. So on the lower time frame, until this level remains intact, I will expect a bounce from the current level and complete the bullish correction. If not, then we will look for the deeper correction. We have already marked the expected zone for the reversal, that's around 62.02 to 62.33. So if it doesn't hold this divergence, then it might give one more push downward and then expect a reversal, completing fib extension 100%, and from fib extension 100% again switch to bearish direction. So I hope I've made my plan clear for CADCHF. It's a bit tricky. Short term retracement, then bullish, and finally going to the bearish direction. Now the next instrument I'm going to talk about is crude oil. So I'll start my analysis on the weekly frame. So what I've done here, I just need to clear everything. So on the weekly frame, again, very similar to dollar index chart. So first of all, I'm going to apply fib extension in the downward direction, connecting from the highest point to the low, and and joining the lower high. So if Fib extension is going to push crude oil price to the 61% mark, then $58 is the price to look for. Now this is coming from the weekly frame. At the same time, we also have the sequence of low, higher low, higher low, and higher low, along with lower highs. So as I've explained earlier, it's forming a triangular pattern here. So I'm going to join the rising lows, and I will also join the dropping highs here. Now moving to daily frame. Now on the daily frame, I'm going to emphasize on this bearish leg and then correction. So based on this, I'm going to apply Fib extension in the downward direction. First low and lower high connected, and it has not yet completed the 100% extension mark, and there is bullish divergence on the daily frame. Lower lows with higher low on histogram and higher low on MACD lines, and MACD lines have completed the bullish crossover here. So the sellers, they lost momentum here. They could not reach Fib extension 100% mark, and they have also crossed above Fib extension 61.8, that is a price level of 75. So sellers have lost momentum on daily frame. Moving down to 4H. Now on 4-hourly chart, I can see double bottom, and this double bottom is formed along with bullish divergence on MACD lines. Plus we also have lower low formation on the last dropping leg, and this is your bullish divergence, the continuing type, which is not considered a very strong divergence, but the buyers, they have completed the formality of breaking the structure. So BOS is already done. Now I'm expecting that buyers will stop somewhere around at this red rising line, trend line, and complete the correction. So expecting anything between 50 to 61 of the latest bullish leg. After correcting, I'm expecting one more extension in the upward direction. So somewhere around 75.7 or 76, I'll be expecting that the sellers will take over. We will see one more leg downwards, and if this level is not broken by the sellers, then buyers are definitely enjoying the majority in crude oil market, and we can expect push in the upward direction. I cannot apply Fib retracement at the moment because the B point is not yet done. So we just have the starting point, that is A, but B point is missing here. Moving down to 1-hourly chart. Now on the 1-hourly chart, I can see the pattern is bullish because we got bullish divergence here on MACD lines, and then we got the sequence of higher lows and higher highs. We got continuing type bearish divergence, which is not considered very strong. So if in case we get some correction here, it is to be short-lived, and finally I'm expecting one more push up. So we'll be counting A and B here. The B point is imaginary, and we can expect 50 to 61% drop, so somewhere around 72.5 to 73, and we can expect one more leg in the upward direction. Now moving to 15 minutes. Yes, bearish divergence is forming up, not yet complete. So after the bearish divergence is completed, I can expect that sellers will push the price lower for the short time, and then finally one more push up. So this is the plan for crude oil, and finally I'm going to talk about gold. Now the fundamental announcement of interest rate cut is actually in favor of gold. So fundamentally gold remains a buy here, and technically, as I've explained multiple times, I'm going to mark Fib extensions one more time starting on the weekly frame. So this is the lowest point I'm taking on the weekly frame, that's around 1630, and starting my Fib extension from the lowest point, connecting to the first high and higher low. So 2583, 2570 is the level which is still anticipated, highly anticipated, and I've been waiting for this level for a couple of months, and I've explained multiple times in my previous weekly videos. Now the pattern here is still bullish. On the weekly frame, we got the sequence of higher lows all around in conjunction with higher highs. Now there is a bearish divergence building up, but it's not yet done. So until it is done, we cannot create a plan on it. Now here, the next level I'm going to talk about is daily. And on the daily frame, I can see we still have the pattern of higher lows, higher lows, higher lows, all around, higher lows, higher lows, higher lows, and higher lows, in conjunction with higher highs, and new higher highs here. Divergence is not yet done, so buyers, they remain in control of this instrument. I'm going to apply one more fib extensions, taking from the lowest point, connecting to the high and the higher low. I need to change the color here. I'm taking golden color here, and 1.618 is 2390, 200 mark is 2487. So we got a dip. We retested the 2475 mark last week, and now gold remains bullish on MACD. On MACD histogram is still showing bullish power. MACD lines are also showing bullish power. So buyers, they're enjoying the control. We can also add a rising trend line here to add comfort to our analysis in the bullish direction. So until gold remains higher than the rising trend line, everything is good for the buyers. No signs against. Moving to 4-hourly chart. Now again, 4-hourly chart looks ultra bullish here. So we have rising lows, higher lows. We also have rising higher highs and no bearish divergence completed. So I'm going to mark fib extension one more time on the 4-hourly chart, connecting the low, high, and the higher low. I'm going to change the color to green this time, and we got the magnet zone support around 2484 to 2487, and the next level inside is 2553, followed by 2583 and 2595. So anything between 2580 to 2600 is the target for gold. Something similar on 1-hourly chart. We got this dip, and there was bearish divergence on 1-hourly frame last week. In fact, we also got the break below this level, but it was a false breakout. After the fundamental announcement coming in favor of gold, everything turned around in favor of buyers, and now the buyers, they are creating a new sequence of higher lows and higher highs. So no signs against. If you want, you can apply one more rising trend line on the hourly chart, which will add comfort in case if you want to manage your ongoing trade. So this is the rising trend line on 1-hourly frame, and the next rising trend line is here. So until we remain above 2479, 2480, everything looks good for buyers in the gold market. Again, bullish pattern on 15 minutes too. So again, all time frames, they are aligned in the bullish direction. So I do not have any plan in the short run to go for selling in gold. Enjoy the bull run, buy the dips, and target is 2580 to 2600 mark. So I hope I've added value to your trading plan for the coming week, for the current week, and enjoy your trades, stay profitable. Bye-bye.